Kernel recently announced they're launching 3 new funds, which has come as welcome news to those of us who benefit from their low-cost index funds. These include the Kernel Cash Plus Fund, the Kernel Balance Fund, and a New Zealand dollar hedged version of their popular Global 100 Fund. These funds round out their market offering by now having a diversified cash, balanced and high growth fund, which will be welcome news to those who have their KiwiSaver balances invested through Kernel or those that are familiar with these types of funds. The Hedged Global 100 Fund is also a strong move by Kernel, as many investors will be looking to hedge against the currently strong US dollar. While a strengthening US dollar has helped insulate Kiwi investors in the unhedged Global 100 Fund over recent months, when and if the currency swings back, they will be equally punished, and this fund will help combat that. In this video I'll be digging deeper into each of the funds, so make sure you stick around to assess whether these may be a good addition to your portfolio. If you haven't already, please make sure to subscribe down below to keep up to date with all my future content in the personal finance and investing space. For those of you who are new to Kernel, they are one of New Zealand's leading providers of low-cost index funds. Right now they manage over $250 million, and having just launched 3 new funds, they now have 17 on offer. Some of these track global indexes such as the S&P 500 in the US and the NZX 50 back here in New Zealand, while others offer a more targeted focus such as electric vehicles and clean energy. Over the past few months, they've also opened up to accepting KiwiSaver funds and short-term savings accounts through their platform. Most of their funds, known as core offerings, currently charge an annual maintenance fee of 0.25%, while some of the non-core offerings, also known as thematic funds, charge 0.45%. If we look at a close competitor, SmartShares, they currently charge somewhere between about 0.2% and 0.75%. So Kernel certainly offers pretty good value in the market. If you have over $25,000 invested with Kernel, however, do note you will have to pay an additional $5 a month as a membership fee to be able to purchase their funds. While you can purchase SmartShares either directly or through a broker or app, such as Sharesies or InvestNow, with Kernel you can only purchase their funds through their platform, and luckily their website is one of the easiest to use in the industry. You can find them at kernelwealth.co.nz, so don't go looking for them on Sharesies or Hatch. So that gives a quick intro to Kernel as a fund manager. Think low fees, a small but powerful funds offering, and having a simple to use platform. Let's now jump into the funds. Let's start with the Hedged Global 100. With an annual management fee of just 0.25%, purchasing a single unit in this fund offers you a tiny piece of 100 of the world's largest companies. Think along the lines of Apple, Nike, Chevron, Johnson & Johnson, and Procter & Gamble. These are the types of companies that we all know and probably interact with on a daily basis. Not only are these companies large and have operations globally, but they also are profitable with a strong market position to offer investment returns over the long run. The fund tracks a global index called the S&P Global 100 X Controversial Weapons Index, meaning that no weapon companies are included in the fund, so you can be sure that your money isn't being used to finance these. In the name of the fund, of course, you'll also note that it states it is hedged. When we purchase stocks outside of New Zealand, often the stocks won't be sold to us in New Zealand dollars, so we need to change currencies. If later we sell our stocks and change the money back into New Zealand dollars, sometimes our returns will be heavily dependent on how the exchange rate has shifted over that time. Because Kernel hedged this fund, it simply means that they remove this currency risk altogether, meaning the returns are not influenced at all by the currency moving. So if you want to invest only in the performance of the underlying companies this fund invests in, this will be a good fund to consider. If you want to invest in the companies, but also think the currencies will appreciate relative to the New Zealand dollar, Kernel's Unhedged Global 100 Fund might be a better suit. The fund currently offers a dividend yield of 2.4% per annum, and over the past 5 years, the index has appreciated in value by 9.3% per year. These historical numbers are just that, however, and may be different in the future depending on the performance of the underlying companies. It also has a risk rating of 6 out of 7, which means this fund is better suited to long-term investors who are willing to accept higher volatility in the value of their investments. Kernel recommends investing for between 5 and 10 years in this fund. Over the past 5 years, the annual returns have been very volatile, ranging from a loss of 16.2% in a single year, all the way up to a positive return of 67.5%. So you can see there's a huge swing between the two. And as an investor, you need to be willing to accept this risk if you want to invest in this fund. Over the past year, for example, it has had a loss around 11%, so this is just something to be aware of. For this fund, and all others I'll be covering in this video, you can find more information in Kernel's product disclosure statement, which you can find by clicking on the Disclosure Statements button at the bottom of their website. Under Kernel Funds, you'll find 4 documents which have great information to understand all of the risks and fees of investing before you invest. The next fund on offer is the Kernel Cash Plus Fund. If you already invest in KiwiSaver, you'll have seen reference to cash, balanced and growth funds before. You can think of Kernel's 3 diversified funds as following the same structure. In their last round of bringing new funds to the market, Kernel launched their High Growth Fund, and this time around they've added 2 lower risk funds for investors. Their new Cash Plus Fund is of course an incredibly low risk option for investors wanting to protect their money while hopefully getting a return that's better than what they'd get in a savings account. With a risk rating of 1 out of 7, this is rated as having a very low risk. This fund of course does not invest in stocks like most funds do, but instead they invest in something called short-term New Zealand-based interest-bearing cash assets. In simple non-jargony terms, this simply means that your money ends up as a debt owed by a government, bank or company to you. Over the past 5 years, the annual returns have ranged from 0.28% to 1.98%, which as you'll recall is much more stable in value compared to the Hedged Global 100 fund, which could go up or down in a year by as much as 60%. With inflation surging to rates above 7%, the returns from the Cash Plus fund are much lower. This means the purchasing power of your investment under these conditions will be lower when you withdraw than when you made the investment. For this reason, this fund is best placed for those looking to preserve the value of their investment while achieving a return that beats those offered by a savings account. And finally, we have the Kernel Balanced Fund, which like the Kernel Cash Plus Fund is also broadly diversified, however with this fund investing 60% in stocks and 40% in fixed income investments. In the name of course is the word balanced, and that's what this fund offers. With a 60% weighting in stocks, you get a bit of exposure to the high volatility stuff you'd get with the High Growth Fund for example, while you also have a 40% weighting of the safe and stable stuff a fund like the Cash Plus Fund invests in, for example. Like the other funds explored in this video, it currently charges an annual management fee of 0.25%, and its risk rating comes in at 4 out of 7, meaning it is bang in the middle, balancing between low and high risk investments. Over the past 5 years, the heaviest annual loss offered by the fund was negative 8.4%, while the highest return has been 29.85%. So if you're an investor wanting exposure to stocks, which generally have a greater amount of volatility, but are still cautious in wanting to minimize your risk, this might be a good fund to explore. So there you have it. Kernel continues to offer a great selection of funds to investors, all at a pretty reasonable cost relative to other fund managers in the New Zealand market. If you want to learn more about the Kernel offering, you can check them out at kernelwealth.co.nz or watch some of my other videos showing you how to use their platform and exploring some of the other recent additions to their fund offering. I'll include links to those at the end of this video in the end screen. Please make sure to subscribe to the channel if you haven't already. And with that, thanks for watching and I look forward to catching you on the next one. Cheers.